Inflation in the UK rose at an annual rate of 4.4% in July, the highest figure since 1999. Mr King said the prospects of growth have deteriorated as Britain, like all advanced economies, is facing testing times.
Financial market conditions are worsening and the banking system as a whole remains short of capital. As a result, credit conditions have tightened and lending is being restricted. This is true not only in the United Kingdom, but also in the most advanced industrial economies. All our economies are experiencing a difficult adjustment. For the world as a whole, there are two elements in the required adjustment. First, following the shock last year to the financial system, the balance sheets of the financial sectors in advanced countries need to contract. Second, following a long period of rapid growth, there was a need for a slowing of demand to reduce overheating and ease pressure on commodity prices. That two-part adjustment presents one of the most complex challenges that the world economy has faced for a very long while.
Mr King said there was no quick fix for the current problems facing the UK economy.
In the UK, we face a difficult but temporary period during which inflation will remain high for a while and output growth at best weak. It would be most surprising if next week I were not required to write a further open letter to the Chancellor explaining why inflation is more than a percentage point away from target. But provided we do not impede the required adjustment, we will come through this temporary period and resume a path of normal economic growth with inflation close to target. The two global factors that I referred to are having an obvious impact on our own economy. A sharp reduction in the growth of money and credit is now bearing down on the level of activity and inflation in the economy. And perhaps of even greater significance for demand, real take-home pay has been squeezed by rises in energy and food prices, so holding back household spending. The rise in CPI inflation this year largely reflects sharp increases in global energy and other commodity prices, which have been compounded by the depreciation in the sterling exchange rate.
The Governor said the UK economy would recover if inflation is brought back down to the Bank of England's annual target of 2%.